Yeah, so today's topic we're going to be looking at where is it? Okay. Understanding the core logic of the market. All right, so that's what we're going to be looking at. Understanding the core logic of the market. Okay. There are three things, all right? There are three things that guides the logic, that guides your understanding in terms of the logic of the market, which you see in every strategy. See, you can quote me anywhere, you can go get the strategy and let me see what it is, right? But it's either they are using all or they are using one. That's it. Now, number one, a strategy. It's something that every particular strategy actually have. So if you understand the logic behind those things, you see how they come to play out most of the time. All right. So number one, you need to understand that the market is a game of liquidity. Okay, the market is a game of liquidity. So number one is liquidity. Okay, that's number one. We are talking about the core logic of this market. All right. Number one is, remember this aspect now, all these things they happen inside the structure, whether it's a bullish structure or a downtrend or a bearish structure or consolidation. This core logic happens in all those structures. So please follow me from where I'm coming from. Right? I'm coming from three phases of the market, which is either an uptrend, a downtrend, or consolidation market. Then inside those things, there are price elements, which I've made you understood, right? That's expansion, retracement, reversal, and consolidation. You guys got that one. Now, those things, now those price elements, now, right? The operations, right? In those price elements, and then your phases. These are the three things which I've just mentioned. One as liquidity, two, breakout, retest, and three, we all go back to what? Volume. These three things are what the market is based on. So once you understand the logic, you can build any. Once you understand the logic of these things, which I've just told you, which was one, the market phases, the price element, and then the core logic. Once you see these three things, you can use to build. Once you understand it, you can use to build any strategy. Any strategy you can use to build. Once you understand these three things. So now, like I said, let's talk about liquidity first. The market is a game of liquidity. And of course, we should know that the market does not move, just at random. It hunts for liquidity from a liquidity point to another liquidity point. Liquidity in terms of where traders have their stop losses, their pending order, it hunts them. That's what moves the market up, down, like that. So you must really understand that. All right. And then if you now ask me now, oh, what are those liquidities? All right. Those liquidities, we're looking at swing high, swing low. That's range, swing high, swing low. We're looking at previous. So yeah, let me just call it the previous swing high, previous swing low, because it could either be previous month high, previous daily high, or previous weekly high or low. All right. We talk about session high or session low, equal high, equal low. Okay, we're looking at them on the chart, like. All right. So liquidity, very, 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 very important. So once you understand that liquidity is one moving price from point A to point B, you will know that for you to determine your directional bias, it has to be in line with a liquidity target. Now, breakout and retest, very, very, very important. All right. When we talk about breakout and retest, it's just simply the same thing as what? expansion, and retracement. So our expansion is coming out of a certain point, all right? It's coming out of a certain point. And let me give you an example of that expansion now, right? Let me give you an example of that expansion. If price ranges in a particular place for a while, okay, now the logic behind breakout and retest is still what people in support and resistance, they call support and resistance. That they use their own direct. So support and resistance, price here, support here is resistance. Once it break out, come back and retest. So SMC, they have their own. Me, I have my own. I'm calling my own. My own may not necessarily have to come from here, but I'm calling my own expansion. However, it forms the expansion. So one thing you should know is that expansion, right, or that breakout that took out that particular point, all right, which price has been trying to like test or has been resisting price, that expansion would leave an imbalance. So what will price do? When people now start jumping into the price here and FOMO in that, it's already going. That's a lot of retail traders. Someone's already going. You go. We as investors will relax and wait for what price to come back and retest and then come. All right. But you see the thing here, right? See the thing about breakout and retest. When I was trading trend line that time, all right, all we saw on YouTube was you use this to identify the trend line. All right. Once you identify the trend line, you now say it's what it breaks out. Wait for the breakout, then you enter upon the retest. My question then was, retest what? That was my question then. And nobody was giving me what am I retesting? You should need to give me something. What am I retesting? Nobody at the time. I didn't see anybody that actually defined what I was going to retest. I just knew breakout and retest, enter from the retest point. Until I understood volume 2. All right. Now volume, which otherwise I call volume 2, are those sections that I spoke to you the last time, which is order block, right? It's a volume 2. FVG is a volume 2. Breaker block is a volume 2. So you can. Are you guys following me? Please, I need to know that I'm not.
Yes, we are following you.
Yeah. Okay, good. So until I realized volume 2, then this was volume 2 that now answered my question. I can understand this. I can understand the breakout, but I did not understand this. So it was when I discovered volume 2 and I knew what they were going to retest. So if I see a breakout and retest like now, I already know what price comes to retest. I already know. I'll just mark it there. If I want to trade the strategy, I'll just mark it there. And price will just come straight to that point and then go. As opposed to before where I don't even know what I was doing. And then they will tell you if you break and retest, you put your entry here, and you put your SL here above here. This SL is just too big for my liking. All right. But the moment I'm target here, but the moment I found what it was coming to retest, my SL was not like this. More precision. All right. Which of course I don't necessarily have to even get to this place. I just target, see that breakout. That particular breakout before the reversal, that's my TP. Anything after that, and no concern me again. I became much more precise with my entry. I had more understanding as to how this thing works. Do you understand my point? So once you understand this, you know that when price is targeting a particular point, let's talk about liquidity now. All right. There's something that I used to, before we go into market structure, right? Let's finalize this. Sometimes I tell people that one thing about liquidity is that previous entry serves as present liquidity and present entry serves as future liquidity to be what? Sweat. Do you understand my point now? So since I understood all these things, So what I need to do is that all this became my reference point. All right. Expansion became the breakout. Retest became the point of entry after identifying another volume 2 for a continuation. And what? Liquidity became my target. There's what they call exit liquidity and entry liquidity. Now, liquidity before your entry is what they call inducement. All right. Sometimes I am the inducement and I'm also the person that will come and take out myself because I understand how this works. And let me give you a clear example on the chart for those of you that might be thinking I'm talking, it's now. Speaking of liquidity right now, all right, this is this is swing high, swing low. All right, swing high, swing low. And what happened here? Price came, took out this low. All right, swing high. Maybe for those of you that don't understand, this is a high, a low, a high, a low. So while inside this range, price came and took out this low. And what happened next? Price was heading to take out this high. So liquidity below has been swept. Now what happened next? Here. You realize that here was a point of entry for me. All right. Here was a point of entry for me. So I would have caught this entry here. All right. I would have caught this entry here. And if I had caught that entry there, this should have been my entry. All right. This should have been my entry. All right. Now, I may not have told you guys anything about that yet, but anytime price mitigates a particular POI, it leaves an order. All right. Like I told you guys, I do order block, fair value gap, rejection block, and what? And breaker block. So at this point now, there's a rejection here. And mind you, this rejection block you are seeing here on the lower time frame is an order block or a fair value gap. All right. Now what happened now? Price came there, mitigated that one too again, and popped to the upside. Now what do you see here? You realize that this point of entry here at my first entry, all right, at my first entry, we have what? We have previous entry is now serving as what? Liquidity to be taken out. Price came into this place now. Now remember this low now, left the high. Price came into this place, reacted from here. Reacting from here now, we have another liquidity line here. All right, went, took out this liquidity above. Have you seen it? Came back inside the POI here, bought again, took out the high of this one again above. Right? Are you seeing it? Took it out. Then what happened next? Now we have what? A line up of liquidity. Yeah. Now what the price come to do? Came, took them out before we now went to take the external liquidity finally. Are you getting the point now? So what was happening here? It was inducing. So people knew that this is the target. What was it doing? People that entered here are still waiting that our price will take here. It came back. They are still in profit. That money still here. My trade still there. Go into another position again. Price came there. Came back again. Planted another one here again for them. Came here. It didn't take them. Now, as a smart money trader, you know that for all this liquidity, their job, this whole swing lows here, their job is to eliminate this high. If they fail to eliminate this high, then they have to be responsible for their actions, because once you fail to take out that particular intended high, you have to pay for it, and the payment for it is to come back and sweep all of them. And now this is the low now that has come to take that high. Don't worry, you guys will get clarity on all these things when we get inside. I just want to let you guys understand the logic behind the core of the market. And that's why I told you guys, after you understand this, don't forget that in as much as your liquidity serves as maybe your previous day high, previous week high, everything, you should also realize that these are just external liquidities. This is an internal liquidity, but there are also internal liquidities that you need to take note of, which is what people call inducement. So you need to be able to interpret and follow and know that yes, so I am the inducement, but I am still the person that will come and take out myself. For those who think I'm still in the trade, I've left the trade a long time ago. You get my point? So all this one that people call inducement. So sometimes when I post on Twitter, and I post a buy, some people now start commenting that where you enter you be swept, that's inducement. I will laugh because me, I know that I'm the inducement, but I will first follow chop that one. We are smart money traders. We'll be out of the market because we already know what's happening. Price come back again from here again, I'll follow it again and go. Price come back again from here, I'll follow it again and go. I know that this is my target. Then when price come there, I've already seen that the liquidity pool, what's happening, taking them out, and as you can see, we join, and that's it. So that is for liquidity. You need to understand that those things are very, 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 very important when we talk about the market. For breakout and expansion, if you look at this point here, for breakout and expansion, what do you see? Let me go to where I call this trade. So apparently I did not enter directly from here. All right, I waited for confirmation. So what did I look for the confirmation in terms of the breakout? What do you see here? All right, what do you see here? This one I use another entry model, so don't worry, I'll teach you guys this one later. But now, what am I showing you here? Let's use this because normally I'm supposed to wait for this this expansion candle, which is in breakout, all right, and then wait for price to come back into that level before I buy. But because of my experience, you get my point. This is too far, all right, it's too long. So once the reaction from the PY is long, it creates what they call SNT, all right. It's going to like buy towards that place and then give you a retracement and then pump. It usually retraces into a fair value gap, and then what happens? It takes out that place. Now you are already in the trade, but then there's already another point of entry here because you have broken out, but we have not retested. All right, so expansion has expanded, but we've not gotten our retracement into that level for us to finish the buy. So I'm still expecting price to come back into this level, which will now continue. But this is, talk for another day. All right. So, but what am I trying to let you guys understand here now is that these are the core, logic behind the market. And once you can understand volume, you can understand the breakout and retest, right, which is also expansion and retracement. All right, that's just another name for it. All right, but that's what people need to understand. These names are just different changes. They're just changing the names, but these are just what you need to understand. And liquidity. All right, and liquidity. I'll break it down. Now let's go back to which of these tools, all right, that are very, very. Should I talk about these tools now? Okay, let me talk about it now. Which of these tools are majorly for those three price elements? Now, if we talk about consolidation, right? I've already told you already that consolidation is just moving within a range. All right, it's just moving within a range. So it's always at a particular, high, right, and at a particular low. All right, price will just, that's why it's called a range. It's just ranging within that particular zone. All right. So what is the within a high and a low? What is the major point? It's just the equilibrium, the midpoint. That's just the major thing that as price is dancing, right? Just the midpoint. So you now start seeing what happens within a consolidation. You see what price will start moving from. It gives you very, very, very short move. So it moves, it breaks here, it retests here, it comes down to the range, comes back, test here, do like this again, breaks it, tap here, come up. It's just moving like that. So it doesn't give you any clear movement. And you know why? I'll explain why to this when we dive into structure. All right. So it's just a state of equilibrium. All right. While for reversals majorly uses order block. All right, reversals uses majorly order block. Do you understand my point? While for expansion, this is an expansion, right? It uses what? More of LVG. All right, and why is that? Because price has expanded. All right, price has what? Expanded. So that expansion is like an impulsive movement of fuel just jumping from 5 naira straight to 100 naira. There's a big gap. So it always comes back to fill that imbalance, that gap, which is the what? The fair value gap. All right. And then it goes up. And then don't forget, previous entry, still on liquidity, previous entry, this is the previous entry. What serve as what? liquidity. Now, this previous entry, now don't forget now that we've reacted off the fair value gap. Don't forget that that particular move has an OB here. All right, has an OB here. When price wants to come back, price will do what? Price will come back and seek that previous entry as liquidity, tap into the OB, and then pump again. But that one will get a very deeper understanding as we proceed. But just get it in mind that reversal will be expansions, LVG. All right, so just have that in mind. All right, so before I move on to market structure, do you guys understand, or do you have any question you want to ask me before I move on? Though when I move on to market structure, now you guys will really understand, but that's where everything will now start coming together. All right. So do you guys understand? Please, I need answers. I need answers at this point.
Yes,
I'm
it's
strong.
quite clear so far.
Okay, good. Yes, I'll move on to the next, which is market structure. So now market structure, all right. We have two types of market structure, which they've taught you. The one that is the higher low, which is called basic market structure, and the second one, which they call either algo market structure or advanced market structure. All right. So those are what, because the ones that you see on the textbooks or the ones that they teach you, just creating higher low, and stuff like that. All right. And then we have the algo, which you should understand that liquidity is now involved. All right. And the difference between this particular one and this one is just liquidity. All right. So where you're looking for higher high, higher low, when you're trading advanced market structure or algo market structure, you are looking for what? Liquidity. And just as much as I told you, previous entry serves as future liquidity, just as much as the present entry will also serve as future liquidity for later. So, but what drives the market in this is the liquidity, the internal liquidity to the external liquidity. All right. So as you can see, liquidity is just what differentiates them. All right. So let's get into the structure properly. Now let's first of all start from identifying that first we have the basic market structure, and two, we have the advanced or algo market structure. All right. I just hope you guys are following. Don't worry, the video is recorded. Always go back because as you're proceeding, and then you guys start seeing some certain things. It's whatever you know is what these things have to. We're going to the end of this theory part, and this is like the end part. Yeah, you understand? So once we are now in action, in the action phase, where we are on the chart and all this stuff, you will now understand why some things are happening in the market when you make reference back to what these things I'm showing you, and that's why I'm showing you these things first. Because the moment you understand these things, over is the case for you. I say at some point you start seeing certain things in the market that you have been seeing before, but you didn't know that it was a thing. You understand? So we have these two types of market structure. The ones that we were taught, because I was also taught that before, that you see higher high, higher low, higher high, higher low, higher high, higher low, higher high. And what we're expecting price to do, and in this bullish market structure, we're expecting the lows to be strong and the highs to be weak. So the weak highs is what gives us what? Break of structure, BOS. All right, the weak highs is what gives us what? Break of structure. And then in an event when price invalidates the strong low, it now gives us an indicator that this is what? A change of character or change of market structure shift. And then what happened? Price now start creating lower lows and lower highs. In that case, it's a bearish trend, and also known as a downtrend, where the lows are weak, creating break of structures, while the highs are meant to be protected. All right, so that's the basic market structure. while the algo, otherwise known as the advanced market structure, states otherwise, and that's where the real life of the market comes into play. All right, the market, just as much as I showed you guys on the chart, on that other particular example. Let me dive straight to the example because I don't have this one. It's not something to show you. Avoid this. This is by the way. So back to what I was showing you guys here, and back to what I was showing you guys in this particular point here. We realize that the real market, all right, the real market will not just be giving you higher high, higher low, higher high, higher low, higher high, as smooth as you think it should. All right, which of course from this particular point, if our target is here, we are on an uptrend. But you see that it did not come as smooth as they will tell you a high, a low, a high, a low, a high, a low. You see, it's not coming as smooth as that. But what happened? The moment price had given you all the criteria you need to meet, what happened next? So this is what that basic market structure will not prepare you for. Boom, and that's it. So what happened here? We had engineered liquidity, all right? This was inducing people to think that, we are targeting this. They all know you are going to target here. They all know. So that's why they start coming to tell you that, I was in profit and price came and took me up and still went in my direction. That's where they have those problems. You understand my point? So it was going. So following the books of the basic market structure, you are right. This is where we are moving from. We're targeting here. So from here to this place, we're meant to be on an uptrend, and we have been respecting it from a high, from a low to a high, low, high, low, high, low, high, low, high. So what we're experiencing here, we realize that that's why I tell a lot of people who trade, who don't really understand the logic of the market, but want to start building narrative based on what they know. You start seeing them struggling. And I'm sorry, because I used to be like that before, and I saw how much I struggled. Before they will not find their entry, they are doing like this. X like this, center, you hit it. So in their mind, they are feeling very, very meticulous about what they are doing. You know, everything is like moving. They come here again, they hide, they low. You know, you're creating more breakup structures. All right, they will name it BUS. They come here again. It was a strong low. You pick out. You know, they come, they do like this. You know, like that, they're tracing it. So see all these things now, right? All these things are stress. Because why? They're trying to determine what the structure of the market is before you will now find your entry. Whereas you would have been the market, you have been the structure, the formation of the structure even before the structure forms. If you really understand the logic, like I told you guys here, I got an entry here. I would have entered here, done my 1, 2, 3, I'm out. Price come back to this place, I'll enter again because I know that after price reacts from a POI, it leaves another POI. Because why? Volume. For price to react from a place of volume, it creates another volume because others, it's just the same way I told you, people know that, okay, price will react from this particular place, for example. You know, all right, that price will react from here. All right. Now, once price come here, what do you see? You see the strong rejection, volume, because it tells you that they were prepared. So immediately price came there. So this place now, there's another volume that's been created here. Others have been placed here because they knew that yes, this was going to react. So when price comes to that place again, price will react from here again. So we're going to chop it. Now you realize that while you are marking your BOS, we are following you to be as you're marking your BOS, but that your BOS is our TP. Come back again as I look at this strong low, and this as I'm marking those we are hitting. Then at the end of the day, when you now find your entry and say, okay, let me enter from here, we'll now still come back again and then carry you guys out of the liquidity pool and then go in that intended direction that the market was supposed to go. It's just about you understanding the logic. Now, all this is I'm telling you, right? When we go into the market and start addressing strategies and how to, get an approach to the market, you realize that it's much more simpler than by just you understand the logic. So I've told you what the basic market structure is, and then you've just seen exactly what happened with the advance. So price did what? Came back and swept all of them, right? And what happened? It went in that intended direction. You understand my point? So that is what the basic market structure is. For the algorithm, for the algorithm or the advanced market structure, right? You realize that it's just about what? Liquidity. All right. The difference between these two is just liquidity. All right. So if we are looking for break of structure to the upside, and of course, if we are on a bullish trend, following the basic market structure on a bullish trend, you realize that the three logic are playing out here. Now, what's the three logic that are playing out here? Before price will take out a particular high as break of structure, you need what? An expansion. Okay, you need an expansion, and then after the expansion, what happens? Retracement. So part of the logic, which was number one, liquidity, number two, breakout and retest, number three, volume. So first of all, breakouts, then what? Retest. So expansion, pull back in, and then move. Now, what volume is it coming to? This expansion will leave what? Will leave fair value gap. All right, come into that place, expand again, break structure. All right, do the what? Retest again, and then into a volume two. But so you see that the basic market structure has what? Two of the logical components. One, it has the break and retest, breakout and retest. All right. Then secondly, what does it have? It has, somebody should answer me now. It has
Volume.
what?
Volume 2.
Correct. I'm not the only one here now. Volume two. So you see that that's what it has. So the only thing that it lacks is what? Liquidity. Are you getting the point? It lacks liquidity. So the advanced market structure will give you, as an example, we're using bullish, whatever happens on the bullish happens on the bearish market structure. Just the reverse is the case. So it's still the same thing, giving you the same structure, the same breakout. But this time around, when it's coming to retest, all right, it's coming to sweep liquidity before it goes. Sometimes it necessarily doesn't have to come and take out the old low or sweep the old low liquidity. But what it do is that it will plant liquidity before it's even, after it breaks out, it comes back, or sometimes before it breaks out, it comes back, sweep that liquidity and then continue. So, but all you need to know is that while you're marking your breakouts, BOS, while you're marking your BOS at the advanced market structure, you're also what? You're also marking out your liquidity. All right, you're also marking out the liquidity. Liquidity is what pushes price. So at the end of the day, what does the advanced or algo market structure has that the basic does not have? Is just what? Liquidity. So at this point, you should now be equipped enough to understand that these are the logic that I have to see before I enter a certain trade. To identify a breakout is not hard, right? I mean, to identify where price will break out from is not hard. To identify the volume tool is not hard. To identify liquidity tool is not hard. Only if you know how to look out for liquidity. Only if you know how to point out to say, okay, these are places where price comes to come and take out. And that's why I gave you guys the narrative about understanding that the past liquidity, that the past entry serves as future liquidity for the present entry, just as much as the present entry will serve as liquidity for the future entry. Just simple as that. So once you understand that logic and that narrative, it's easier for it now go on the chart and know what you're looking for. Do you understand? Now, since we are not dealing with this anymore, the basic market structure, now let's look at the algo market structure. So I've given you guys an example of the algo market structure and what you should look out for. So now, the market structure in itself, right? First of all, reason why we avoid the range, all right? Now, this is a range, all right? You must always understand what's happening, because a range doesn't mean that because it's ranging, you stay out of the market. You're always staying out of the market that you're not participating inside the range, but you're waiting for price to give you what? A clear direction. And based on your anticipation, there are two things that you need to anticipate for, right? In a range, right? In a range, there is lineup of liquidity. So under the algo market structure, let me not confuse you guys. We are done with basic, so we are not doing basic. And the difference between basic market structure, I'll ask you guys this one later. All right, so ready to answer me? So now the difference between the basic market structure and the advanced or algo market structure is what? Liquidity. So since every other thing is constant, which is the breakout and the volume two, so liquidity. Now let's start identifying liquidity. Now where does liquidity lie? Please come and answer me. Come here, all of you. Where does liquidity lie within the range? Anybody? Anybody?
Equal highs.
Eyes and equal lows.
God bless you. God bless you. So you realize that the liquidities are here. All right, the liquidities are here. So your anticipation now is that you're waiting for price to give you a clear direction. Now, how do you anticipate price to give you a clear direction? Let me give you an example. Now, let's go to the monthly time frame. For those of you that were on my live call when we were talking about Euro USD a few months ago, when I just started becoming active on my Telegram channel, I told you guys here, all right, that I've not been trading Euro USD for months because of why? Because we have been in this range. All right, we've been in this range. All right. So now my own thought is that I'm expecting price to do what? Because of this expansion that's happened here already. All right. I'm expecting price to what? Come down and take out. Now, why price expanded from here? Give me a clear sign that what? Bullish people are in the market, buyers are in the market. So now, trying to predict, which I don't advise people to do, but you should actually be able to anticipate. Prediction is different from anticipation. Prediction is you being sure, most in in a higher percentage that this is most likely to happen. Anticipation is okay. I am expecting it to happen, but anything could go otherwise. This is my anticipation. Just my point. So this right here is the consolidation. So what do we have above here? We have liquidity here. All right, and we have what liquidity below here. All right. So as far as this range is concerned, right? As far as this range is concerned, this particular place here, liquidity has been swept here, right? This was where the range started from. So this liquidity here has been swept above, and this here has been swept below. All right, this here has been swept below. All right, but we have not, this whole sweep now, as you can see, we've not entered into any volume two. All right, so the reason why consolidation happens like this, consolidation, why it's always at equilibrium, like I said, why it's only at equilibrium, because this is a balance, this place is balanced, price here is very balanced. When we take from this swing high to this swing low, all right, you realize that here price is balanced. All right, so meaning that there are equal buyers and equal sellers in this particular region. All right, price is balanced, so price will just be going, coming back, going, coming back. So the next thing to look out for is that since I already seen this expansion here, I know that yes, there are what? There are buyers already in the market, but right now we're actually consolidating. So my first anticipation will now be, we want to see this liquidity here swept, liquidity here swept. So we have a swing high and now we have a swing low. Now this swing high, swing low, now everything happening inside here is within the range of this swing high and this swing low. So I'm expecting one of these places to be taken. But with this first indication here, that's giving me that where the bullish, the buyers are already in the market. And then what again? Under it here, under your liquidity, right? What's your liquidity? The next thing you should look out for under your liquidity is the volume two. Now, under that particular liquidity, what do you see here? You see a fair value gap. All right, which is the volume two. So the volume two now has told me that okay, fine. If price now is coming to take out the liquidity below, if you come and take liquidity below first, I know it's coming to plant new liquidity inside this volume two, which is the fair value gap, and then we spike to take out the upside. If you go and take the one up here, then I know that you're coming to take down any high wants to go. I'll just be playing for the right direction. Now, the moment price came into this place, it was now my confirmation that liquidity below has been swept. Now, what am I expecting price to do now? Price should go and take liquidity above. But like I gave you my illustration, traders would have entered from here. And what happened is they would have been struggling here for weeks, not for months, because imagine when price came inside here, give you a bullish rejection, you'll be happy there, but closed with an institution candle, you'll be happy that it will soon pump. What happened next? Price will come back again. You see, we're even inside the range here. We're inside the range of this particular candle. Do you understand my point? We're inside the range of this particular candle for another month. So you see there are struggles. You just chill and wait. All you want to see is you want to see expansion. You want to see what? Expansion. Before you can now say, okay, yes, we are going to get in. Now this is just for the monthly expansion. You will not want to see what this expansion will show on 4 hours. The expansion that took out this particular high on 4 hours would have gotten our entry from there and then ride this whole candle like this. You choose to hold this trade, like you ride it from here, from this candle, because in a month this candle will just be going. I've told you guys before, right? This is a monthly candle. All right, to just be doing like this. To just be doing like this. So your expansion would have happened here. To just be doing like this. You understand my point? So you would have on 4 hours time frame, you are getting your expansion, you have entered, price just be dancing above here, dancing, then go up, take TP, you come back down again before it opens and then continue like that. You know my point. So at this point in time, it has already given us why a clear direction because liquidity has been taken below. Based on this is now based on ranging markets that we're avoiding. But we're not just avoiding that, okay, after you have played out, you need to avoid it for this whole scenario. Or when that once you have anticipated the directional move that you want to make based on the volume tool that align above and below that particular range liquidity, you can ask, okay, any one price goes for first, I'm going in the next direction. Because at this point, it has given people fake out. So people are thinking that, we'll be ranging now. This bearish candle now, this long candle now that happened now are giving them that, we're going to start selling only for price to do what? Take them out, trap them, because they are trapped here. What happens next? Price now ship out these people that were intending to buy, ship them out now, go and trap these other people that were thinking that were going to continue selling, and all of them here that also want to go in continuation. And what happens? We go in the next direction. So at the end of the day, you need to play with that three logical tool, core, which is the volume tool, liquidity, and breakout and test. So if you look at it and go back to our price elements, you realize that it's almost the same thing. It's just that now you're now understanding the logic behind the elements themselves. You're now understanding the logic behind when you now understand the elements, you know that the elements are part of the things that makes up the structure, which are the three market faces, either trending to the bullish or to the bearish or consolidation. So once you understand these three things, market faces, price elements, and the core logic of the market. Once you understand these three things, leave the rest. Everything operates on that. Q&A session. Do you guys have any question for me real quick before we go into the last phase? What's the time already? We've done always on time. I like that. Any question? Let me see what our next topic is about.
Please, can you show us the example of advanced market structure in a bearish market?
In a bearish market?
Yes, sir.
Okay. Okay. As you can see, you can agree with me that this is... Yes, please go ahead. Go ahead.
Okay, my question is about the time frame, because sometimes we see consolidations within in a certain time frame that has a consolidation. There could be bullish market structure and also bearish market structure. So sometimes I think I'm wondering how you use the time frame to, like, how you can based on the time frame, how you can really interpret whether you're in a bullish or you're in a bearish. Because, for example, the last example you showed us, it was in a monthly, and inside that monthly, I'm sure there was bullish and there was also bearish inside that consolidation. I don't know if I'm clear.
Yes, you're very clear. All right, I will attend to that. So now, before we go into that, you can see, all right, the person that asked us about that downtrend. Are you seeing this? This is a downtrend, right? Ben asked me that question from here to here now. This is a downtrend, not the guy who's asking
Yes.
about advanced
Yes, sir. Yes,
structure.
sir. It's
Yes.
a downtrend. Yeah.
Okay, good. Now, this is a downtrend. You agree with me, Abi? Are you seeing market structure giving you a very, very, very clear low, clear high? This is the normal basic, right? It's not the
Yeah.
basic.
Yeah.
All these ones are happening here. What are they?
Those are the advanced market structure.
So you will realize that the market, if I don't like a far play buyer, and that's why me, I'm not the kind of person who does well within the 4 walls of the school, because you'll be teaching me something and you look so perfect. But when I come to the chart, I'll just start seeing something different. So if you cannot give me a logical reason behind why prices are going like this, then forget about it. Don't worry. Just on my point, don't worry. So now I'm not teaching you anything about advanced market structure for you to come and trade advanced market structure. No, we're not. I said you will make the structure. All these places like this, you'll be catching trades inside all these places. You have no business with that structure form. You have no business with when we just form a new low, and you have no business with that. You are going to be person. You're going to be the person inside here, because why? I am just educating you right now to understand the logic, but I'm driving you somewhere to a simplified version. I cannot start breaking down market structure for you to not say, and this is what you not see when price sweep up, when price sweep down. No, you can only explain that to people. But when you are trading,
Okay.
because you understand the logic, are you with
Okay, sir.
me?
I understand. I understand now,
Yes.
sir. I understand what you mean. Yeah.
All
Thank you
right,
very
all
much.
right. So we'll get there. Where is some person asked me this question now. This question has skipped my mind. Yes.
Is it my question
Yes. I
about
remember. Don't worry.
time frame? Okay.
Yes. Now for that monthly time frame, right, on EU, this is it here. So you see, you have the time frame, all right, and that's why I will say this right here, because that's where we are going to be leading into our next section, all right. On no app, see, it's not like you cannot catch trade on smaller time frame. You can, but see, if you are looking for your setups, please, if it's not for scalping, do not go below H1. All right, if it's not for scalping, do not go below H1. And as a matter of fact, when I'm going to be teaching you guys, we're going to be operating on only these time frames. All right, we're going to be operating on only these time frames. When we get into when I get into teaching you guys, right, we're going to be operating on only this time frame, and I will tell you the logical reason behind that. Now, before I go into that aspect now, right? Oh my God, I forgot, totally forgot. Before I go into that aspect, right? When we talk about this range, all right, when we talk about this range here on the higher time frame, you realize that what you said is absolutely correct. Absolutely correct. Okay, it's absolutely correct. So you realize that as long as this range is on the higher time frame, all right, from here, from this swing low to this swing high on lower time frame is a full downtrend. From this place to the next high is a full downtrend. But if you must trade, that's why I say avoid it. If you must trade this, you need to now start going with the narrative, follow the narrative of this to know that if I am on that lower time frame, I should not get too excited and expect price to. I have a range, so maybe you're targeting that. Okay, once price gets to this place, now I will pull my TP. If I'm selling once price gets to this place, now I will get out of the trade. Maybe here you work with this range high and this range low. So I know that, okay, if I thought I want to buy and sell, that is when you can now trade consolidation phase. All right, you can. People trade it. I do trade it too. It's not like I don't. But see, I trade reversal. I trade consolidation. I trade all the phases. But say I want to make my life very simple. I focus on continuation, which is expansion and retracement. It's just as simple as that. It's not like I cannot trade some, which will get trade here easily. Just that I cannot trade consolidation on a smaller time frame, because why? how many movement do I want to see on 1 minute or 5 minutes or 15 minutes. But if it's consolidation on the higher time frame, like monthly, weekly, daily, I can go and look for trade, because there are sometimes that people traded this now. You know my point, but you see that within this place, you have a lot of people complaining more because they don't know that they were in a consolidation phase. It was later they now came and check and say, no wonder price was misbehaving. They were just complaining the market, complaining. So if you know that you're in a consolidation phase and you want to trade it, you need to know that there are other approaches to trading that. You need to know how to trade that, because why some people are complaining, some people are milking it. So if I were to trade this right now, I will not expect any too much price movement on the lower time frame. I'll just target here. I will draw this line here. If this thing will permit me to, let me see if 1 hour will allow me. Let me first go to 4 hours first. Okay, good. Now you see this 4 hour time frame. Now we have a very, very, very good movement. So everything we'll be doing now will be operating from here. So imagine now I want to catch this trade here now. All right, I want to catch this trade here now using this expansion. All right, using this expansion. So I would have caught this expansion. All right, here. All right, I would have caught this expansion around this place. Okay, it didn't get there. It did. I would have caught this expansion here. I would have caught this expansion here. All right, which would have now served as what? Don't forget, previous entry will serve as what?
Present
liquidity.
God bless you. So, why present entry will answer? So let's keep this liquidity here. It's currently at our present entry. So I would have entered from here, put my SL here. Remember, I'm in a range. All right. Where is the SL? So I would have put my SL here, slightly above the FVG. And what would have happened? All right, what would have happened? I would have targeted. Now, don't forget this line. Remember, this line is within the range I've already drawn. So if I'm going to ride it inside the range, because it's the higher time frame, I would have targeted here. All right, I would have targeted here. So I know that anything below this place I need to do, because price can reverse because we're in a range. So you see, I've already given myself a mark based on the higher time frame on that range inside that monthly time frame. So I've wrote the downtrend. Once I get here, I stop out. I will not be expecting price to do what? To come and take this low here. Or I'll not be targeting one extreme low and say this is where price is coming to. Price will nearly hit my TP, and what will happen? Price will bounce back on me and then take me out. Now, price now go back to that range again. Now, previous entry, yes. Now it's not serving as liquidity. Why? Because after price has reacted off the volume tool of the what? Of the fair value gap, is now while it's coming to take out this entry from the fair value gap, where will now be the next volume tool? The next volume tool will now be this OB. All right, now that OB now is where we're now reacting from, and now me seeing that okay, at that previous entry now still will, but OB now don't come again. Now what happened? What do you see me do again? I take from that OB, all right, and then what do? I target the same range, because I know that yes, that place, so I know they go past them, because why? Price can change. Now what do you see? I've just showed you how I would have traded it. Have you seen it? If I targeted this place and said, because price come and sweep here, I'm in a range, see what happened? Price came and reversed from here and then went and took me out. Do you understand my point? So you need to, so that's why I say, if you don't understand how to trade consolidation, avoid them. It's not like I don't know how to trade, I know how to trade it, but I just don't want the stress. Don't stress me. Me, easy peasy, easy going. Anything that stresses me, I move my hands. It's not like I cannot do it. It's not like I don't have that power.
You are good. You are good and common. You really open my eyes right now. You are good. This one is really voltage.
So you understand my point. So it's not like we cannot do it. We can do it, but we choose our poison. So ranging, I know how to trade the ranging market. I know where and when to trade the ranging market. I will never trade the ranging market on the 5 minutes or 15 minutes. If I want to trade on the 15 minutes, then I have to be trading on the seconds time frame. 15 seconds ahead. That's why I would trading. Don't trade 15 minutes or 30 minutes range. But the higher the range, you find the range, the lower time frame you go and get the trend. but I always just avoid it because I don't want to be. So if I want to trade the ranging market, I can only trade the higher time frame. But you see the way I actually told you how I'm going to trade it, because I've already gotten my exit, my liquidity exit. I've gotten my entry is not hard to find. These are exits. Exits have skewed more people than entry. All right, so that's for the ranging market. All right, now let's talk about expansion. All right, let's talk about expansion. Now, what's the expansion now? Let me give you I think we've settled that of range. So let's talk about the trending market. All right, the trending market, which is the expansion market. Why I always tell you guys that that's just the easiest. Okay, so now if we are in a bullish market, all right, in a bullish market, whereby you know that the trend has been established that we are bullish. All right, the trend has been established that we are bullish. Now, as you can see, please, what do you guys see here? What is this? What is this? It's one of these folks based on market structure. What do you see
An
here?
uptrend.
These are an uptrend. Now, in an uptrend now, what are we looking for? Since we have said that we're not trading consolidation and we're not trading reversal, what should we be looking for in an uptrend?
Expansion.
Bullish
Expansion
Looking for
and
retracements.
retracements.
All right, good. All right, good. All right, good. Fantastic. Now let's start spotting the expansions. Is this an expansion?
Yeah.
Yes.
Good. That's an expansion. All right, so let's start marking out all the expansion. Let's start marking out all the expansion and then let's start seeing. So price has started moving from here. All right, I started moving from here. I'm not seeing any clear expansion, so all these places price are balanced. All right, price is balanced. The reason why I'm looking for expansion is because that imbalance will always be filled. It might not be filled instantly, but definitely will be filled. So at this point in time now, this was the last bearish. Actually, this is balanced, right? This was the last bearish leg before what? An impulsive move, an expansion. So this place now becomes my what? Place I'm expecting price to what? Retrace into. All right. So let's say I waited. Price is not. So this is what? Breakout and what? Retest. So price did not come back into this place, which of course price will definitely come back later. But you see all this place right now, these are what? Liquidity. All right, these are what? Liquidity for future. They are coming. So because this place now needs to be balanced. Now we kept going. What do you see here again? You see another what? Let me use the 4-hour time frame so that it's not dirty. I'm leading you into how I caught a particular trade. Do you understand my point? I'm leading you into how I caught a particular trade. Let's use the 4-hour time frame. So we see this place here, right? Was the last consecutive candle that swept, because it's all about liquidity, that swept what? This is a POI. Though I will explain that to you. So let me not go into that, but that's like more like, I don't want to confuse you. I'm just showing you guys expansion. We're in the expansion phase now. We have talked about a consolidation, how to even trade the consolidation market. We talked about it, but avoiding it too. We say we should avoid. We're going to avoid that. We're avoiding reversal. So we're not going to really look at that. The only reason why I looked at that consolidation was because of the question that particular person asked me. So we already agreed that we don't want to trade consolidation and we don't want to trade reversal. So let's focus on why we are here. So expansion. So we're reacting off of volume 2 on the higher time frame. And then after price has done its normal thing, this was the first expansion that we saw that took out this particular level. So what happened? We're expecting price to come back into this place, right? Which fits in the what? Expansion and what? Retracement. So after breakout, retracement is what we call retest. So what happened next? Price has not come back there. But what happened? We have liquidity lying here. So let's say we missed this, all right, no problem. But this is the POI that we're looking out for future. But what do you see here at this point in time? What do you see at this point in time? You realize that while we after the expansion, we didn't see any clear expansion again until this particular place. So we see an expansion here. All right, we saw an expansion here. All right, the price did not come into that zone. But what did it leave? It left what? Liquidity. All right, left liquidity. So we are still going. So this particular entry, we did not get our entry here, no problem. It kept expanding, kept moving up, but we're not seeing any clear expansion. Every expansion that you want to see, though, don't forget, we have been noticing what? Break of structure. Don't forget, we've been noticing break of structure. All right, do not forget that we have been noticing what? Break of structure, which confirms our directional bias as what? Bullish trend. But we're not getting our entry, all right, because we need to see price sweep liquidity before we get in. All right, so just giving us the normal basic structure. You see all this place now, normal basic structure, now they're happy. Higher, low, lower, high. For example, you get my point. We're not seeing any clear liquidity, so they are actually enjoying. But our expansion, it must always leave a fair value gap. If it doesn't leave a fair value gap, then we don't take it. Now, would you compare this expansion with this one? You see that this is one candle expansion, this two candle expansion. This is the kind of expansion we look out for. You see this is not an expansion. This is not an expansion. Then we kept going, we didn't see any other expansion, any other place, anywhere, until we got to this particular zone here. All right, so that was how I was able to cut this entry. But I did not see any clear, there was nothing until I saw this. When I saw this expansion, what do you see happening here? All right, I marked out that place and waited for price. You can see it left series of fair value gap. All right, I waited for price to come into that place. Now, mind you, right, we have price expand, come into this place, broke this structure. All right, thereby leaving what? Liquidity. Do you understand? Thereby leaving liquidity. So in this form, liquidity could be anything that creates a swing low in an uptrend within that particular range that you're expecting price to come into. All right. So it created what? Liquidity to be swept. All right. So at this point in time, let me take this out. Right. At this point in time, this place needs to be balanced. It's an imbalance. So it needs to be balanced. This place, well, I don't see this as this is the fair value gap here. It needs to be balanced. It left this gap. So meaning there was an impulsive movement. So whatever happened here, right, that made price pump from $5 of fuel, using our example, and then pump straight to $100. Price has to come back to come and balance, at least to a certain extent, balance price before it continues going. So what happened? I just marked that point, which was the three consecutive candles before the pump. What happened? Price came up and then went. Just the same logic behind it. Liquidity has been found, ticked. All right. No, first of all, what happened? We have a breakout. So that's expansion has been ticked. All right, expansion, which is also breakout. All right, has been ticked. All right. Secondly, what else has been ticked again? We have liquidity. We have spotted our liquidity, which has been ticked. All right. Now, since those two have been ticked, the next thing we're waiting for now is what? Is now the retest. All right, it's now the retest. So the expansion has occurred, which the expansion is also known as the breakout. So now what we're waiting for now is the retest. Just as simple as ABC. When price got there, what happened? We retested. Now, if you ask me, what exactly is the volume 2? Right? If you ask me, what exactly is the volume 2? Now, if you look at this particular place right now, we had price pump, break, came to test before it dropped and then pump. So this particular place will now serve as our volume 2. And you can see what happened here. You see how price, after creating it, right, it came down impulsively. You see price came back to test that particular candle, 1, 2, drop before it broke it. So this place has not been retested until now. I understand my point until now. So this particular impulsive movement has given us that yes, buyers are very, very strong in the market. So meaning that fuel of price now has jumped in. So some people are going to be jumping in here, jumping in here, jumping in here. We will now wait as an investor for price to come back into this so that we can continue till we target that place, that particular highest price. Now we don't know that price is going to continue going, but see that particular high, we are going to take it from there. But if you must want to hold, you know where you are going to, because we already have a directional target, which is here. So if you want to hold, you already know where you are going to go and hold your hold. But then again, I'm going to teach you guys about exit plan. All right, I'm going to teach you guys about exit plan. Do you get my point? I'm going to teach you guys about exit plan. So if you check all the entries I'm doing, this is on a lower time frame. It's just about expansion. The trade that happened. I took this on a lower time frame, like 15 minutes, using the 1 hour POI, right? The other ones are just 4 hours POI. So if you look at all of them, it's still the same logic. What happened? Expansion, test. Afterwards, liquidity sweep. Liquidity sweep, expansion, liquidity must be there. I understand my point. Liquidity must be there. So you can see after liquidity, expansion. So liquidity I'm taking, expansion has occurred. I've seen the expansion. Price came to this place, dropped liquidity, went up, came back, sweep, and then went up. What are we seeing here for this second one right now is that after price sold this liquidity, expansion occurred, liquidity is here, price has come here for second entry. So it's just the same thing over and over and over again. Don't worry. In our next session, we're going to break this whole strategy. Now, this is where we're not coming to the strategy. We're not coming to identify, because before we can now know how to start trading like this, you need to first of all identify what the directional bias. So once I teach you how to identify directional bias, and there are two ways I want to teach you how to identify directional bias. Two. One is simple approach, one is the algorithm approach. So once I teach you those two, once you can identify directional bias, I'll now give you higher time frame mapping. So you will know the higher time frame to use. And I have told you, we go nothing lower than the 1 hour time frame. We deal with daily 4 hour, 1 hour. Then once I give you that, after teaching you the directional bias and then teaching you the higher time frame mapping, I will now give you the checklist for what you need to see before you can actually do what you need to do. At that point in time, we are graduating into the real deal. But what I can give you on that, what I can make you guys understand that it's just as simple as what you are seeing here. What you are seeing is just the thing you're going to be doing for the rest of your life if you choose to go with this particular strategy. Or not with strategy, I don't call it strategy, with the logical understanding of the market. It's just as simple as it's the same thing you do over and over and over and over again. Are you guys with me? If you are with me, say yeah, yeah.
Yeah, yeah.
Yeah.
Yeah,
Does anyone here that doesn't understand what we have been teaching since? Please, I need you. You I need. I don't want you that understand. I don't want them. You that don't understand, you I want. How far? If you know you don't understand,
So don't worry, we understand.
My head don't full, bro. My head don't full. I dey try make I put everything inside.
okay, I will not rush you guys. Yeah, I'll not rush you guys. What I would, but you guys have an assignment. All right, you guys have an assignment, and your assignment is to go and look for either a bearish or bullish trend, any pair of your choice. At least not any pair of your choice. Everybody should submit at least one pair. So I just need to just do a screenshot of one pair. Just maybe look for it and then map out all the expansions that you guys see. So you can map out like this one now. I showed you this particular place right now. All right. All you just need to do is, if you see an expansion like this, don't use the pair I use. Nobody should use NZB APY. Just use this tool and just mark it outlines for me. Like here now, what do you see? You saw on that small expansion. Just mark it out like this for me. Just use that box tool. Just mark it out like this for me. All right. So that's all we'll just do. So just look for only one pair of your choice. Any pair of your choice. Go to the 1 hour time frame. Just look for either uptrend or downtrend. Don't just look for one of the trend, and then within that trend from this high to the next side. Just export the expansion inside there, and that's all. You get my point? That's your assignment you guys need to do. Submitting the assignment session. All right. I'm going to go to everybody has to do it. Everybody has to do it. So everything now, right now, to stop now, is all begin to come together. But it come together more when we now start addressing the strategy itself. But thank God that I'm really happy that you guys understand the logic now. So if I explain anything that we're going to explain further from here, it's just going to be very, very, very simple for you because you already know what you're looking for. As I'm talking to you right now, you already know what you're looking for. Please don't go and start testing it because you don't know exactly what time frame combination, what you timing, what to wait out for and stuff like that. Because there was someone that reached out to me. I was like, oh, come on, look at what yesterday. This is what it's first mapping. I understand you are really wanting to grasp it, and your mind is like wild. You're trying to like think that you're not going to catch it. Maybe what I've said has passed you by, and then you're going to start looking for it. Don't worry. There's no way in this whole wide world that will finish this particular session with you guys that you will not get them. So that will be the assignment for you guys, right? Go back, watch the video again. It will come back to you when we start going to the next topic. We're having where is it? The next topic we're going to be talking about directional bias. Identify directional bias. I have 2 ways to teach you that. Then after we do that, then in fact that directional bias will take the whole of our next session. Before we get to that time, it's going to be an exciting ride. We're going to a point where we're going to ask questions and answers. If you guys have any question right now, based on what I've taught to you, please ask me that question. In the absence of no other question, it's past the time. I would have to end the call. All right. I don't know if anyone is raising his or her hands, but if you have any question now, please ask me.
Okay.
No questions, sir.
I just have something to say. I really like the fact that you said, that everything you explained today is so powerful, like 100%. And then I like the fact that you said this is not a strategy, it's a mindset, it's a system of understanding, the logical understanding that every. But one thing I've come to discover, is that that I like about this thing. This thing practically just exposed everything all. But the concept of areas, I would just like to just say as a side areas, because it's the level of patience that needs to be like people need to just activate the act of making sure that they are so patient, because this strategy, this trading mindset is, in fact, this is the best of explanation I've seen so far. Yesterday I was wild. I was sleepy. I went to sleep like that, so happy. And then coming back again today, although I came late, but coming back again today and then seeing the best explanation I'm receiving today is just so massive. Like my boss, I don't know, but he deserve more. Like I just don't know how we can shout these things and scream it out. That like you are just so good. Like, because trading is one, and then you see the aspect of teaching to make sure that everybody understands. That's the best point for me to know that yes, you deserve more counts on your head, sir. So thank you so much for tonight's class. I know, I know between now and the next 1 week or 2 weeks, will be fire everywhere. That flash sign will be raining. It will be trending everywhere. So thank you so much, my boss. Yeah.
All right, thank you very much for that, Chris Truth. Of course, guys, if you are really impacted by this teaching, do well. All right, do well to go on Twitter, tweet about what you've gained, the impact you've gained today. Use the hashtag Common University, and then tag me. All right, you guys did an amazing job yesterday. I really like that. So that's going to like create awareness to like get more people involved and say, okay, fine, let me come, because at the end of the day, it's going to be about the community. It's not going to be just you guys alone. So